It's keeping its key rate steady at 2% for now, but as expectations mount of a rate cut early next year, so are concerns about the impact that could have on household debt, which has seen record growth in recent months. Hwang Jie reports.
The Bank of Korea has decided to stand pat on its key interest rate, allowing more time to gauge the impact of two previous rate cuts in the second half of this year. The central bank held the key rate unchanged at 2% in December, following its monthly monetary policy meeting on Thursday. The central bank lowered the rate in August and October each by 0.25 percentage point. The rate cuts, which came in line with government efforts to boost the ailing domestic economy, left the country's base rate at an historic low, not seen since the height of the global financial crisis in 2009. Still, market expectations are growing of an additional rate cut early next year. They're being driven by recent monetary easing in neighboring countries like China and Japan, along with weak economic sentiment at home despite aggressive government stimulus measures. Low inflation also leaves room for more rate cuts. But lowering the key rate would stoke concerns about snowballing household debt that already stands at roughly $950 billion. The government's deregulation drive in the housing sector and a lower key interest rate worked in tandem to boost housing loans. Finance Minister Choi Kyung-hwan also emphasizes the importance of structural reforms to pull the economy out of its low-growth rut, as top central banker Lee Ju-yeol says the current 2% rate is sufficient to support the country's recovery momentum. Hwang Jie, Arirang News.